I'm going to show you exactly how to start trading Forex in 2024 so you can live the life of freedom that you deserve. Let's get into it. So first things first, what is Forex? Forex is the foreign exchange market. So just think about it this way, right? Every country has their own dollar, right? So the United States has the United States dollar. You go over to London, they have the euro. You go over to Japan, they have the yen. So all we're doing is trading one currency pair against another currency pair. So for instance, if we're trading Euro USD, we're trading the euro against the United States dollar. And all we have to do is click buy or sell. So if we think the euro is stronger than the dollar today, we're going to click buy. We're going to go in, make some money, and then get out the market. That's simple. If we think the euro is weaker than the United States dollar, then we're going to hit sell, do the same thing, make our money, and get out. But now I'm sure you're guessing, well, how do I know which one's stronger and which one's weaker? So let's head to the computer and I'm going to show you how to exactly do that. First things first, you want to create you a TradingView account. Now, TradingView is where all the traders go to look at the data, right? We need to assess the market, do our analysis so we can make the best decision possible. And you need to use TradingView to see the data. So you're going to go to tradingview.com. So once you get here, this is what it looks like. We're going to go to get started. It is free to use TradingView, but they do have a professional version where you can replay the candles. So when you're starting to back test and testing out strategies, you'll definitely want to upgrade to that. But for right now, the free version is fine. We're going to go to sign up. So you can sign in with your Google account, Facebook, Twitter, Yahoo, Apple, whatever you want. LinkedIn, just make an account. So I just connected my emails and created the username FXCarlos121. So after you do that, you're just going to come click this icon right here. So you can go back to the home page. Right, and now we're going to see our charts. So let's just click on one so we can pull it up. We're going to go to see super charts. Okay, boom. Now this is TradingView, right? Now these right here, we are not trading. This is not Forex right here. This is a whole nother thing, right? This is stocks, Apple, Tesla. We're not trading there. So you can just delete all those. Just hit the X on the side. Then you're going to click right here that says add symbol, right? This is where we want to add the pairs that we want to trade. Now, when it comes to the pairs we want to trade, it all depends on what time you're going to be trading, right? So if you're going to be trading London session, then you're going to be trading GBP pairs, right? If you're going to be trading New York session, which I trade and I think is the best, you're going to want to be trading USD pairs. They all move different in different sessions. So whatever session works the best for you, then that's the session you're going to trade. You're going to click on Forex, right? Now you're going to see all these pairs. You can choose any one of these pairs to trade. And over time, you'll find which ones are your favorite, which ones seem to work out best for you. If you want to see mine, I'll show you right here. So these are my pairs right here, and you can see everything that I trade every single day. And you can see that I won a banger today. I made 1 to 4, right? I risked 1,000 to make 4,000. You know, that's just a little glimpse. That's just this morning. It was a couple hours ago. But now let's get back to the regular chart. So let's just pick a random one. We're going to pick this one. Get rid of these ads. Okay, so when you get your trading view, your chart's gonna look like this. Now, first things you want to do is you want to start setting up your charts. So we definitely want to have some higher time frames in our list. Personally, I don't go any higher than 4 hours as I feel like there's no point. The H4 shows us enough data to make an educated decision. So what I'm going to do is I'm going to hit the H4, I'm going to hit the H1, and I'm going to get the 5 minute. These are the time frames that I trade in. It all depends what you want to trade. There's a whole bunch of ways that you can trade Forex. It all just depends on your situation. Now, there are swing traders, right? Swing traders might take a trade on Monday and won't get out the trade till Friday. Now, the cons of that, even though you're going to trade in a long time, you might make a lot of money. You will also be waiting weeks and weeks to get a trade. So me personally, I don't do that. Now we have intraday trading, right? This is the second style of trading. Intraday trading is like you're trading for a couple hours, right? You're not doing a whole day. You're in a trade for a couple hours. Now, last but not least is scalping the markets. So a scalper is in and out the trades very fast. They're in there for 10, 20 minutes max, and then they're out the trade. So you got to decide what kind of trader do you want to be. Me personally, I'll say I'm a scalper / intraday trade, right? Because I'm going for high risk to rewards, meaning that I want to risk a little bit of money to make a lot of bit of money. So sometimes in that case, you might hold a trade for longer than a couple minutes because you're trying to make a lot of money from a little bit. So you got to hold it longer, which ends up being an intraday trade. With my style of trading, these are the time frames that I use. So now that we started them all, we have them up here for quick use, 5 minute, 1 hour, H4. Now, a great tip for you guys to write down is is the higher the time frame, the stronger the data is. So you might see something on the 5 minute that looks like a buy, right? You can see we're going up, but then you go to the 4 hour and it looks like a sell. You can see prices going down. What you're going to want to do in that situation most times is you're going to want to listen to the H4, because the higher the time frame, the stronger the data is. So every single one of these candles, it took 4 hours to print, right? So this is 4 hours, this is 4 hours, this is 4 hours, this is 4 hours. These are all 4 hour candles. If you go to the 5 minute, these are all 5 minute candles, right? So this is 5 minutes, 5 minutes, 5 minutes, 5 minutes. So since you're on the 5 minute chart, you're only getting data over the past 5 minutes, right? So it's not going to be compared to the H4 where it had 4 hours to make up its mind on how the candle wants to close. But we'll go more about everything you need to know about candles in a little bit. So the next thing you want to set up is your tools, right? These are the tools that we use to mark up lines. You might see a support and resistance. Support and resistance basically just like a wall where price keeps bouncing off of, right? We have Fibonacci right here. Some people use the Fibonacci. I don't use it, right? That's the Fibonacci, right? So these tools are very important to analyze the markets. So you're gonna do the same thing as you did with the time frame. You're gonna come and start starring them, right? So you're gonna hit this arrow, right? You're gonna see trend line. You definitely want that star. Right, you're gonna go to another one. Let's say you want the Fibonacci, you're gonna put a star. You go down to right here, this is gonna be what you set as your position, right? This is how you get your lot size, your stop loss, your take profit, which we will all go over in a little bit. So this is a long position, right? So let's say we wanted to buy right here, right? So we would put it right here. This blue part is the profit. The red part is the stop loss. So if the candles come down and break this red part, you would get stopped out and you would lose your money, right? You would lose $1,000 or whatever you're risking on that trade. If it comes up here and passes this blue line right here, then you made money, right? So right here it says risk to reward ratio, right? That means you're making 3 times your risk. So it's just 3 of these boxes on top of each other, you get 3 times your risk. I'm trying to make this very simple and easy to understand. Now let's say this red box, your stop loss is bigger than this blue box, your take profit. Now you're going to be risking a whole lot more money to make a little bit, right? Now this is how you become unsuccessful. You always want this blue box to be at least 2 to 3 times bigger than this red box. That's how you become profitable. You want to risk $10 to make $30. You want to risk $1,000 to make $2,000 or $3,000 or $4,000. You don't want to risk more than what you can make. Same thing for a sell. Now when you're buying, it's called a long position, and when you're selling, it's called a short position. So let's say we wanted to short it right here. Same thing, just the colors are on the opposite side now, right? So this is our stop loss, this is our take profit. We always want this number right here to say 3 or 2. Just think of it like that. When you put this up, you want this to say 3 or more or 2 or more, never under. So now that we got our time frames and our tools set up, I want you to add this indicator to your charts. It's going to make trading a lot more easier. So you're going to go right here to indicators, click on that. You're going to type in the word kill zones. Then you're going to see this kill zone by Oscar VS, right? This is the one you want. You want to start this and then click it. It's going to come onto your charts. You're going to see all these colors. You're going to be like, what is going on? So go to the 5 minute to set this up, because the 4 hour is too close together. It's going to be confusing. So go to the 5 minute. So now you see all these colors, right? And you're like, what is this? Basically what these colors are is showing you what session is active at the moment, right? So if you see this part right here, this is going to be London session. If you see this green part, this is New York session. You're going to want to come to settings, and you're going to want to turn off every session that you're not trading. So I trade New York session, so I'm going to turn everything else off. So once you turn off every other session, if you don't see your session showing up, if you don't see no colors, you're going to want to go to style. Go to the first 2 colors if you're trading New York session. So I'm going to make this blue. I'm gonna make this blue, right? And now you see the color come up. This is New York session. So this is the start of New York session, and we're still in it currently. Now, if you're trading London session, you'll want to scroll down and change these colors. It's very simple. So once you exit out of that, now we know that we only want to take trades in this colored zone. So if you zoom out, you're gonna see New York session for every single day, right? And now this helps when you're back testing and testing your strategies, and this just helps every day to know that you're trading in the right zone. You only want to trade in your session. So if you're trading USD pairs, you want to be trading in this session. If you're trading GBP pairs, you want to be trading in this session, which would be red. So now that we have our trading view set up, let's talk about the candlesticks themselves, right? The candlesticks are telling a story, and you got to know how to read it. So let's zoom all the way into a candlestick. So the green candles are for buys, right? The market is going up, the buyers are pushing it up. The red candles are sells, the sellers are pushing it down. Very simple. You see green, we know that we're buying. You see sell, you know that people are selling. Now when you see these lines coming out, we call those wicks. They're candle wicks. Notice how they look like candle wicks in real life. And what these wicks represent is rejection. So when you see a wick, I want you to automatically think rejection, right? The candles are rejecting from this spot. What this means is the candle was red all the way to down here. And then the buyers, the green side, pushed it all the way back up, made it reject, right? It rejected it. They said, nope, you're not going down. We're pushing it up. And we ended up closing like this. Same thing with the other side. The buyers were in control. They pushed it all the way up here, right? This is the highest point that the candle went that was green. And then the sellers, the red side, pushed it down all the way down here, right? We got a rejection. So the buyers tried to push it up and the sellers said, nope, you got rejected. Both sides were strong enough to make it close like this in the middle, which we call a doji candle, which a doji candle is an indecision candle, right? The market doesn't know what to do. Both sides are too strong that they just ended up in the middle, right? Just think of it as a game of tug of war. Both sides are pulling. Nobody won this round, right? Maybe the buyers won a little bit because it's a little bit of green, but at the end of the day, nobody has won yet. So then you want to wait for the next candle. Same thing with the next candle. The buyers pushed it all the way up here. The candle was green. This candle looked just like this one until the sellers pushed it back down and made it reject. So the sellers took over, then the sellers pushed it right here. The buyer said, nope, we're pushing it back up. They had a tug of war, ended up closing like this. Now, one thing I want you to keep in mind, it doesn't matter what the candles do until they close and they print. This is what matters. It doesn't matter if it's pushing up or down. Until it closes and prints like this is the final decision, then that's when you want to take that into account and, you know, compile your data. But while it's open, don't even worry about it. So one last example, you see this big green candle, right? Beginning of the candle open, the sellers were in control. They pushed it all the way down here and the buyers came into play and they said, nope, we're rejecting it. They rejected it, pushed it all the way up here, and then the buyers took over. The sellers weren't strong enough, right? There's way more buyers in the market than there is sellers. So with all that liquidity, all that money that the buyers are putting into the market, pushed the candle all the way up here and closed, which is a great sign. This is what we call a bullish engulfing. A bullish engulfing is when the candle closes above the previous candle's high. Now the candle high is just what it sounds like, the highest point that the candle went before it closed, right? So this is how high it went, it rejected and closed. Once the next candle closes above the high of this wick right here, then we have a bullish engulfing, which is a great sign that buyers are in control. Now the next candlestick I want to tell you about is one of my favorites, and it's called the hammer stick candle, right? So this is what you call a hammer candle right here. So sellers were in the market, we pushed it all the way down here, and then the buyers came in and rejected it, pushed it all the way up here, which is a great sign that buyers are in control. Because you got to think about it. If this candle looked like this in the beginning of the open, and then buyers were strong enough to make it close like this, this is a very great sign. So when you see a hammer candle, you want to see a long bottom wick and a very small or no top wick when we're looking for buys. Now, if we're looking for sells, we want the same thing, just reverse, just like this candle. We have a long top wick and a small or no bottom wick. So if we're looking for sells, this would have been the hammer candle. Now a lot of people have different names for it, morning star, evening star, all types of stuff, but just think of it as a hammer because it looks like a hammer. So that's pretty much everything you need to know about the candlesticks. Now let's go over the market itself. Now there's three types of market conditions, right? There's going to be an uptrend where price is uptrending, or there's going to be a downtrend where price is downtrending, and there's also a consolidated market which price is going sideways, basically just bouncing up and down like this. Now when you see a consolidated market, I highly advise you don't even trade, just come back the next day or go to a different pair because you're probably going to get stopped out. Consolidated market is not a good market to trade. So we want either an uptrend or a downtrend. Now uptrend is just like what it sounds like. The market is going up. No need to complicate it. Just zoom out and say, okay, is this market going up or down? So if you see right here, we're going up, right? The market is obviously going up. So if you see right here, the market is going down. So you can obviously see we're going down. So in a downtrend, you want to be looking for sells. In an uptrend, you want to be looking for buys. Pretty simple, right? Now this right here is a consolidated market. You see how price is going sideways right here? Price is going sideways right here. You do not want to be trading this. You want to wait till the market shows its hand and shows you what it wants to do. right? So as soon as we break out, this is a sign that we want to go down overall, but you got to give it time, wait for your setup. Depending on what your strategy is, you want to be very patient and wait for that sign to enter the trade. So those are the 3 types of markets. So now that you know the basics about TradingView and how to set up your charts, now I'm gonna show you guys how to open a demo account so you can actually start placing some trades. So what you're gonna want to do is go on your phone, go to the App Store, and you're gonna search up MT4. You're going to see MetaTrader 4. Now there's a MetaTrader 4 and there's a MetaTrader 5, but I've always used MetaTrader 4, and everyone I know that trades uses MetaTrader 4. So just use MetaTrader 4. You can see I already have it downloaded, so I'm just going to hit open. So this is MetaTrader 4. So you're going to click the button on the right that says settings. You're going to go to open demo account. You're going to click MetaQuotes demo. So after you click that, it's going to say your name, your phone, and email, which I'm going to blur out. And then you're going to go to account type. You're going to put Forex and US dollar. That's what I trade. Mine says Forex USD because I'm in the United States. I'm familiar with the US dollar, but if you're in a different country, go to your currency just to make it easier to read. Then you're going to go to your leverage. I always keep it at 1 to 100. You can put it at whatever you want, but I suggest 1 to 100. Now you're gonna go to deposit. Now this, what you wanna do is, if you're planning on putting your own money into account, then you wanna put whatever you would be depositing, right? So let's say you were looking to put $100 into account, or you're looking to put $5,000 into account, then you would come and click 5,000 so you can get your mind used to trading the amount that you would actually deposit in. Now, if you're going to go the route of a prop firm, which we will get into in a bit, then you would want to put that amount. I trade prop firms. A prop firm basically is a funding company that will fund your trading account so you can trade real money, and they will just take a percentage of the profits. They might take 10%, 20%, but you'll be able to trade with $100,000 up to $1 million, whatever challenge that you pick to go for. Right now, you do have to take a challenge. You have to pass it. You have to prove that you know what you're doing so they can fund you this money. Now, personally, I use the Forex funder for my prop firms. I've used every prop firm in the game, but I suggest that you use the Forex funder. I'll make sure to put the link down below with a discount code so you guys can get it 50% off. But let's just say you're going to go for a $100,000 challenge so you can get funded $100,000. You would want to put $100,000 on a deposit so you can get your brain and your psychology used to seeing the fluctuation with this size of account, right? Because when you have a $100,000 account, if you lose a trade, you might be in drawdown $2,000, $3,000. You got to be used to seeing that number, and don't panic, because if you're just trading a $10 account and then you jump to trading with 100,000, it's going to be a shock to your psychology. So whatever you plan on trading with, real money or prop firm, that's what you want to put here. You're going to hit register. So now it's going to show your login and your password. So just copy that to clipboard, save it so you can use it again if you get signed out. You're going to hit done. So now this is what it looks for, right? If you're on simple, you want to change this to advanced. And don't get scared or intimidated by all these numbers. They really don't even mean nothing. I don't even look at them. You're going to hit this pencil. You're going to remove any pairs that you're not using. So let's just remove all these pairs, even though I'm not looking at them. Let's just leave Euro USD to stay on track. Okay, so now we have Euro USD. So if you click this, it's going to pop up a window that says trade, chart, details, and cancel. So when you want to enter your trade, you're going to hit trade. When you want to look at the chart for this pair, you want to hit chart. So let's hit chart real quick. So if you see the chart, it doesn't look that great, right? Now this is why we trade on TradingView, because it looks a lot better. You have better tools. This doesn't look good. It looks outdated. So we don't even click on this chart. So when you go back to quotes and you click it again, you're going to hit trade. Now this is going to pop up where you're going to enter the trade. So you're going to do all your analysis on TradingView. And then once you're ready to enter a position, you're going to come here. So you're going to enter your stop loss right here. You're going to enter your take profit right here, and you're going to enter your lot size up here. So your lot size is basically how much you want to risk on this trade. And I'm going to show you exactly how to calculate that in a little bit. Okay, you see right here at the top, it says instant execution. What that means is when you fill out the stop loss and take profit, you put in your lot size and you hit buy or sell, it's going to enter the trade immediately. Just watch. So we hit buy. Now we're in this trade. We're down a penny. Right, so we instantly entered that trade. Now if we click on that, you'll see different options, right? They have buy limit, sell limit, buy stop, sell stop. Basically what that means is that you want to take a trade in the future. So if you see a trade setting up on your chart, but you say, hey, you know what, I have to leave right now, but I want to enter this trade as soon as the candle hits this exact point. Then you would type in where you want your buy limit or your sell limit. So once it hits that limit, once it hits that number, once that candlestick passes that area, it'll enter the trade automatically. You don't have to do anything. But me personally, I stick to instant executions because you always want to be watching it, making sure there's no news or nothing that's going to trigger you when you don't want to be triggered. So now I'm going to show you how to get all these numbers and how to fill it in. All right, so now let's say that we wanted to take a sell right here. So we come get our position that says short position. We would put it right here, put our stop loss and take profit, right? So let's say this is our stop loss and take profit. We have this 3. That means we're risking 1 to make 3. So we're risking 1,000 to make 3,000. So now the numbers you want to get are right here all the way to the side. You see this black box right here? It's going to change when you move this, right? So this is our stop loss. So we want to take that number exactly 1.07825. And we're going to type that into the box that says stop loss on MetaTrader 4. Now, when you come down here, you're going to see this take profit box. When you move this, same thing happens. The numbers change in the black box. So wherever you put it, right? Let's say we want to take profit right here. So once the candlestick passes this, we want to be out the trade. We want to take our money. You're going to see the number is 1.0639. So you would take this number and put it into the area that says take profit on MetaTrader. Simple as that. Now we want to tell MetaTrader how much we want to risk on this trade, right? I only want to risk $1,000 in this red box, right? Now this part is a little bit more complicated, but it's easy, don't worry. Now there's a lot of ways to calculate this. Me personally, I like to use position size calculators. Basically, it's going to do all the work for you. So if you just come up here, type in Google and type in Forex position size calculator. All right, you're gonna see all these different calculators that you can use. So just go to MyFX book. So if you come to MyFX book, you're gonna see position size calculator, Euro USD, that's what we're trading. The money that we wanted to show is in USD. You can choose whatever you're comfortable with. You're gonna put your account size. So we have a $100,000 account. So we're gonna type 100,000 right there. Risk to reward ratio, you're gonna wanna put 1 to 3, or we can put swap with money. So how much money do we want to risk? We want to say we want to risk $1,000. Stop loss and pips, right? So they want it in pips. So what you're going to want to do is come back to the chart. So you're going to click on your short position. You see in this red box, it says 4.7. You want the number next to this parentheses with the percentage. So this is our pips right here, right? This is how many pips we're risking in stop loss, 4.7. You're going to come back right here. You're going to type in 4.7. You can leave this one. You're going to put calculate. Now you're going to say, if I want to risk 1%, we're going to have to trade 21.28 lots. You don't have to worry about the units, just only worry about the lots. 21.28 lots. So on MetaTrader, we're going to come right here where it says 0.01. We're going to click that. We're going to erase that. We're going to put our lots in. We're going to put 21.28 lots. So now that we have our lots in there, we're going to go to stop loss. You always want to put a stop loss. We're going to put these numbers like we talked about before. So we're going to put 1.07825. So that's our stop loss we got in there. Now take profit, you don't have to put it if you're going to watch it, but for the video's sake, I'm going to put it. So same thing for the take profit. You're just going to put this number on the side where you want your take profit to be. So right here, we're going to put 1.07641 in the take profit box. So now we have our stop loss and take profit. We got our lot size. We have instant execution. Now we're going to enter this trade for a sell. So now you see we're risking more. We're already down $21. Most of the time when you enter a trade, you'll already be down a little bit of money, and that's because the brokers and the prop firms, they charge spread and commission. Just think of spread and commission, just what they charge to put you in the trade. That's all you got to think about it. You don't have to go too deep into it. So let's say that we want to close the trade manually. We don't want to be in the trade no more. We want to get out. So you just hold your trade, and when this window pops up, you're going to hit close, or you can modify your trade. Maybe you want to move your stop loss to break even so you don't lose any money, or maybe you just want to close the trade altogether. So you put close with profit of 1 cent. So boom, we made 1 cent right there. It's as simple as that. So that's how you open up a demo account. I recommend that you trade a demo account for a month or two just to get the hang of trading and really start developing the strategy before you start throwing money in there. Now, once you feel like you're ready to put some real money in there and start running up a bag, you're going to want to open up a live account. So when you do that, you're going to need a broker. Now, the broker I'm using right now is CoinEx. So just go to Google, type in CoinEx, and click it right here. This is the broker that I'm using. You can get started with as little as $10. They don't have no KYC verification like a lot of other brokers. It's just an overall good broker. They have 0.0 spread. So you know how I told you when you enter a trade, you're already down a couple $100. Well, they have 0.0 spread. So you don't have to worry about that. They got 1 to 500 leverage. You know, I stick to 1 to 100, but if you want to get more bang for your buck, if you only have a little bit to deposit, you want to get that extra 500 leverage, right? So this is CoinEx right here. You can choose them. I have an affiliate link down below where you guys can sign up right now. And I'll also update that link. If I change brokers, I'll change the link. So always look down below to see the broker that I'm using at the time of you watching this video. It's very simple. You're just going to hit sign up, fill out the information, deposit your money, you'll get your account, and you can start trading live. But now if you want to go the prop firm route where you buy a challenge, you take it, and if you pass it, then you can get funded up to $1 million. So this is the Forex Funder. You can get 50% off any account with the code TFF50, or they have this code TFF50M. So try both, see which one works. You even get 150% back on your refund. So let's say you buy a funding challenge, you pass both phases, you get funded. They're going to send you your money back that you paid for it, and they're going to fund you up to $1 million so you can trade live with. And this is how I made majority of my capital, is by leveraging these prop firms to be able to trade with millions of dollars when only investing $1,000 or $2,000 to get the account. So if you come down here, you can choose your challenge. The 2-step evaluation is always the best. They have a 1-step, but it's harder. The rules are harder to pass. So just do the 2-step. You can see it comes all the way up to $1 million challenge. So you could trade with $1 million right now if you pass this. And this challenge is not hard. Once you learn how to trade and you become profitable, this will be easy for you to pass. But let's just say you want to go for a 50K account, right? You want to trade with $50,000. Your trading period, you have a limited time limit to pass this. You don't need to rush it. Take your time, pass it. Minimum trading days is 0, which is great. Daily loss, right? This is a maximum daily loss. If you pass 5% in drawdown, if you lose $2,500, you will lose your account, right? This is one of the rules. Now, this is just in a day. Now, if you lose a maximum loss, if you lose 12%, which is better than a lot of prop firms, because a lot of prop firms say 8 to 10%. If you lose 12%, which is $6,000, if you go $6,000 in drawdown, you're breaking a rule, you will lose your account. Now, the profit target is, this is when you pass it. If you make $4,000, which is 8% of a 50K account, you will pass it, you will move on to the next stage. The next stage, you have to make 5%. The second phase is easier. If you make $2,500, you'll pass phase 2, you'll be refunded, and you'll be a funded trader. They will fund you $50,000 for you to trade with. If you see right here, once you're a funded trader, you'll get 95% of your profit. So this is way better than a lot of companies. Most companies, you get to keep 80%. Right here, you get to keep 95%. So they're only taking 5% of your profit. So I use the Forex Funder. You know, go ahead and sign up with them. Use the code TFF50, get 50% off any challenge. You can't beat that. Nobody has prices like that. So just use them. I also put an affiliate link down below where you could sign up with them and get that 50% off. Now I want to tell you guys what I would do if I was starting from scratch. Now, I've tried every strategy in the game. What you want to do is learn supply and demand trading. I've tried every one. This is the one that got me rich, that got me profitable, that makes all my students profitable. You don't have to learn from me, but if you want to, my course and mentorship will be linked down below. But you can learn from anyone. Just learn supply and demand. Trust me, I'm going to save you a lot of time. Second thing, you always want to have the higher time frame in confluence with the lower time frame. So if the 4 hour is saying buy, then you want to take a trade on the 5 minute that is a buy, right? You want them to be the same. If the 4 hour is saying sell, then we're going to be selling on the 5 minute. Trust me, it'll save you a lot of time. Now, me personally, I trade reversals off the higher time frame, which leads to me getting a higher risk to reward. And that's another thing that I want to talk about. You need to have a high risk to reward. You don't want to risk $10 to make $10. You want to risk $10 to make $50. So that way, when you take losses, it'll be covered by the wins. So that's everything that you need to know to start trading Forex today. And before I get off this video, I want you guys to know that you guys can really do this. This is possible. This is not like drop shipping. This is not like affiliate marketing. This all depends on your performance. If you put in the work, you will get the results. You don't have to depend on other people to buy your product for you to make money. You need to really lock in, learn these charts, learn the patterns, learn the strategies, and you'll be able to make as much money as you want and gain the life of freedom that you deserve. But that's it for this video. I'll see you guys in the next one. Peace.